Hey, hi, it's Rob here. This is April 2025 mid-month market update. Of course, we got lots of things going on with the economy. Mark Carney potentially getting in for the Liberals. Trade tariffs, of course, with Donald Trump. Interest rates are on the way down, but still high. And inflation is still a big factor. So let's get into it and we'll see how all of that is affecting Calgary's real estate market numbers. All right, here we are. Oh, aren't you lucky? You get two of me. Any event, this is my marketing update for mid-April. Let me just increase the size of this a little bit so it's easier to see, to go through the numbers for you. All right, and there we go. In any event here, let's look at these numbers. So what I've done here is gone through and taken off the inventory numbers, the 30-day back sold numbers, the average price of those 30-day sales, and then the average days on the market for those in the three different market sectors here: detached, attached, and apartments. And then gone back to 2024 to get our comparable numbers from back then. And in order to get mid-month numbers, I've averaged month-end March and month-end April. So we should be pretty much bang on as far as the inventory 30-day numbers and that go from last year. So it should be an excellent comparison here for mid-month review. All right, so let's have a look. So single family detached inventory, 2,070 right now today, 2024 last year at this time was 1,170, so about half. We look at the 30-day sales from right now compared to this time last year, almost identical, 1,095, and then last year was 1,060. Average price right now, 826,000 average price in our numbers that we ran, and there were quite a few, as you can see. 30-day sold 1,060, and the average worked out to $826,000. Holy camole. Last year was about 800,000. Days on the market, not much change there. 24 days this year and 20 last. So we'll just move on quick to the attach. Attach is a much smaller number footprint, so not as reliable typically. 378 listings right now, 207 this time last year. As far as we go with 30-day sales, 185 this year and last year less, 110 sales. Average price, you can see 682,000 and change, and last year was actually about $10,000 higher in the attached market. So as I mentioned, smaller data footprint, so not as accurate, and one or two houses, in the $1.5 million market last year could have skewed that up, or conversely, two less this year would have skewed the numbers down. Days on the market, 28 days this year, last year 22. Apartments, 1,680 apartments on the market right now today, 906 last year, so a little less than double the market, whereas we were about double up, well, a little less than double the market in single family detached as well. Our 30-day numbers for sold are virtually the same, again similar to the single family detached market, and our pricing, we're up about $10,000 from last year. 37 days on the market in that apartment market, and 23 comparably last year. Yeah, so let's talk about these numbers just for a bit here, because they are significant. So if you can see here, the single family detached, we have about double the inventory. So as I said, that is significant. The sales are about the same, but with double the inventory, that means that our absorption rate, or our rate of turnover, which is very important, is doubled. So we've gone from basically 1 month, the 1,170 inventory, divided by the 30-day sales of 1,060, about 1 month's worth of inventory, to about 2 months this year. So virtually that has gone from a seller's market to a balanced market. So that's a big shift. It's not like the sky is falling or anything. It's more of a normal market. But it's kind of funny with new realtors, because they haven't seen this kind of a market before, and it scares them They just aren't too sure how to handle it. But the average price again, 826, and days on the market, what to be expected again. And that, yeah, so the attached market's working out about the same, 378 in inventory, 185 in sales. So that's about 2 months, whereas last year, as you can see, 207 divided by the 110 is 1 month. So the reason this rate of turnover is important, or absorption rate as they call it, is it is an excellent market momentum indicator. It's so much better than our old sales to listing ratio. So around 2 months in the single family and the semi market is balanced. You get down to around 1 month, it's definitely a seller's market. When you get up to 3-4 months, you're in buyer's market territory. So keep that in mind. And then we look at the inventory for apartments at 1680, sales at around 554. So that's about a 3-month absorption rate. So it tells us that market in the apartments is a little bit tougher. The solds from last year are 535 and the inventory was 906. So that's a big swing for the apartment market for sure. So let's go ahead. We'll dive into the long form stats from the Calgary Real Estate Board. And I just want to, just for a minute, talk about the different pockets in the market within the city. All right, so let's get into it here. Now, these are the long form stats from the Calgary Real Estate Board month end March 2025. So they're 2 weeks old now. That's why I updated all the numbers for you so you know exactly where things are at right now. But let's pop into, oh, by the way, if you'd like to have these stats, just scoop me a note. I'm more than happy to email them out to you, and you can take a deep dive into this if you like. But let's for now just look at the different fluctuations in the different neighborhoods. As you can see, there's lots of stuff here. We've covered a ton of it. So here we go. All right. So as you can see here, this is a breakdown of single family detached, apartment, semi-detached, row houses in the different market areas within the city. City center, northeast, northwest, you know the drill here. But months of supply, as you can see, city center there is 2.78. So that is getting into a buyer's market territory. Below that in the northeast, single family 3.56. So these are very, very different numbers from this time last year. Absolutely. Then you talk about those pockets, that Calgary Northwest 1.57, and the Calgary West market is excellent as well, and that is sitting at 1.72. So definitely two strong areas there. Then we go down through the apartment market, and you can see apartments northeast 4.43 is the absorption rate there. I mean, that's getting to be tough slugging, tough to sell an apartment in Calgary Northeast. City Center 3.26. Apartments, I think I did mention that they tend to be more of a balanced market around that 3-month inventory though. So don't let these numbers shock you if you own an apartment and you think things are going to just jump off the cliff for you. The market numbers are interpreted a little different in the apartments than they are with the other segments of the market. So anyways, yeah, I wanted to show you this because just to point out that different areas within the Calgary market are affected differently. So when we're in a trend like we are right now that tends to be down, those pockets that are holding on typically are going to get absorbed into the rest of the trend. I haven't seen a time when there hasn't been. If it's a short-term trend, yes, but this is over the hill of the big increases and the market stabilizing through here. We'll see what happens, as I said, with Mark Carney. If the no more pipelines things comes in and the West gets shut down, then, it's not going to be helpful, that's for sure. And the tariffs aren't helping either. So a few wild cards in the economy. That's it for now. Hope you're having a great evening, afternoon, good morning. Sound like Truman. Whenever you're listening to this. And till the next time, mid-month in May. Have a great day.